Hello and welcome to my series Ask an Angel, where we discuss topics related to the world of startups, entrepreneurs, and investing. I'm your host, Jonathan Hung, and on today's episode, I'm joined by Sanjay Reddy. Thanks, Sanjay, for doing this. It's great to have you.
Anytime. Welcome.
Oh,
Pleasure.
thank you. Yeah, I'd love to give some background about Sanjay. He's a co-founding general partner of Unlock Venture Partners, an early-stage venture fund investing in technology companies based in Los Angeles and Seattle. He has operating experience in multiple verticals, including M&A banking on Wall Street at Solomon Smith Barney, entertainment, and digital media. Sanjay's worked with private startups as a co-founder, investor, advisor, and operator, and an executive of mid-sized, large public companies. He's earned his BA in economics from Cornell and an MBA from UCLA. Thank you so much, Sanjay, for doing this. So let's jump right in. How'd you get into investing? I mean, working in banking and, working as an operator. What made you make the jump to go become a venture capitalist?
I think it was a natural progression. Obviously, as when you're a banker and I was an M&A banker, you advise a bunch of companies around capital raising, and both on the debt and equity markets, as well as with M&A. And so familiar with, sort of transactions and financial transactions. Did my first set of angel investments when I was a banker. And then, continued to do it, every so often. Then I was chief strategy officer at Jumpstart TV Guide, where, we did some corporate investing. In fact, that's how I met one of my partners, Andy Liu, because I led his Series A at his last startup. And then, it's a natural progression once you've done a bunch of startups, to a certain extent, a bunch of startups, worked in corporate roles, angel invested, try to bring all of that experience, and it's the right stage in sort of our careers and lives for us to focus on early stage investing as a professional venture investor.
Yeah, wonderful. So, I'm sure people are curious. I'm sure LPs and entrepreneurs are like, hey, how do you usually find your companies to invest in? Is there a particular pipeline that you have or deal flow? It's just like, how do you find the entrepreneurs that you want to put money with?
For the most part, we're not really volume investors in the sense that, we're entrepreneur driven. We're not thesis driven. So, and we're industry agnostic. So, some people might go out and say, oh, I'm going to find every single company that matches parameters A, B, and C. And then that's how we're going to work off of it and do it that way, more data driven. Most of our deals are most of the companies that we evaluate are based on our personal network, which is, individual proprietary outreach, but also, referrals from other investors, other angels, institutional investors, angels. It could be from our professional network. You talk about the lawyers we work with, the other founders we've worked with, our LPs. It comes from a broad range of folks. And then we do a little bit of sort of proprietary / co-founded deals as well. So that's the bulk of the sourcing. But, people come to our website and have turned in, they use our contact us form to provide us information around their companies. And we welcome any and all folks to tell us about their companies. And we do try to save them time.
Mm-hmm. So for a startup and a founder, what gives them investability, for their pitches? Like what stands out that you want to keep going on diligence and go forward?
I mean, you're well aware of this, John. I don't think there's a one set. I think most people will start from no, and then you got to work into yes, i.e. there are certain things that automatically are going to eliminate you from that particular fund's investment thesis. And I think it's super important. I'll get to what they should have, but I think a very important thing is what to do so you don't waste your time, which is make sure you research the fund you're talking to. What stage, the stage matchup. Are they at the right stage? Do they have money left in the fund? All of those things that you should look at. Have they invested in your space? Are they investing in your space? That saves you time. But I think that the key thing for us when we look at it, it's in a way it's simplistic, but it's that intersection of ability, motivation, and opportunity. it's got to be a
Hmm.
big enough outcome. You've got to be taking a unique approach at it. It helps if you have a running start when we look at it, and it helps obviously if you have the domain expertise and the network to either
Hmm.
initiate or accelerate your business.
Yeah. No, no, it's true. It's funny because I think about like, I'm a startup founder too. And I just think like, you know what? We're just trying to find anybody. Please help us, give us away. But no, you have to be intentional, like you said, because then people won't take you serious enough because it's like, what do I have to do with this? I'm a consumer company. Why would you come to me? I don't invest in consumer.
Well, that is the issue. Like you want to talk to anybody and you hope
Mhm.
that maybe it will lead. I mean, it is true. If you talk to
Yeah.
someone, it might lead to, it's like the hockey assist, right? And so it could
Hmm.
lead to something. However, you have a limited amount of time as an entrepreneur too.
Yeah.
And so burning cycles on, you should always learn from every meeting you have, but you should
Yeah.
also be somewhat intelligent and not, about your time and what you're trying to accomplish.
Yep, absolutely. So let's talk about your portfolio companies. I mean, how many you try to have at one time? I mean, you have two other partners. There's three of you. Each has a specialty. Each of you are in different locations, like Seattle, San Francisco, and LA. Like, how do you split it up? Like, and like, I always love to ask this question. Like, okay, because if you're a solo GP, it's easy. There's only one decision maker.
Yeah.
But how do you get? Is it two out of three or one? But it's like I'm curious. How do you make the decisions
It's always
for
unanimous.
portfolio?
Always
Okay.
unanimous. There's no one time.
Mm-hmm.
There's no like, hey, this is my one time kind of, there is, we
Mm-hmm.
do everything unanimously because we don't, for us. So yes, we are geographically spread, which has actually to a certain extent helped during COVID.
Mm-hmm.
It was
Yeah.
intentional because, we understand our markets really well. I've been in LA almost most of my professional career. Andy's been in Seattle most of his professional career, and Razi's been across all three, but primarily in the Bay Area and Seattle. And so
Mm-hmm.
it helps that, we're very established in those markets. And we
Yeah.
also didn't want to just travel around. We want to be really deep and don't want to waste the time traveling. So it's like, oh, there's a cloud strategic you want to, well, Andy will handle it. He's feet on the street over there. I'll handle stuff out here for across our entire portfolio. Razi will handle, so you want to get to
Mm-hmm.
the A and B guys, he's up in the valley where he can socialize the portfolio there. And so, the way we do it is very easy. We're industry agnostic. We're like, hey, I'll take the LA companies, you take the Seattle
Right.
companies, you take the Bay Area companies, and of course sometimes we will move stuff around depending on who someone has real domain expertise for something. But otherwise, that's the way we do it. But you actually get all three partners. There is no my
Mm-hmm.
company, your company. I literally, everyone talks about it, literally is that way with us.
Mm. No, that's great. And just like, I think you see a lot of people like, you're from LA, you've seen the LA ecosystem grow, but now it's like, for like, I was talking to another GP the other day, and it's like, oh, from 2014 to now, like there's so many people with the fund. And like, what do you think? What do you think it truly means to be an investor? Because I think people think it's like, oh, just having some money and throwing it around. No, it's a little more than that.
Well, as someone say, this is a slow way to get rich if that's what you're trying to
Hmm.
do. So
Yeah.
most
Right.
people are trying to, I at least, I'll give it to most. I think most of us have done our homework. We understand, just like with a startup. In fact, more so than a startup, we are
Mm-hmm.
investing a lot of time and
Yeah.
committing a lot of our professional career to doing this when you start a fund. And so
Yeah.
I definitely think that you have to have a long-term vision. You have to be, just like you have to be an intentional entrepreneur. We're entrepreneurs. When we start a fund, we're entrepreneurs, and so you have to take it. You have to be very intentional. And my feeling is that when we look at this, our horizon is a 20-year horizon, because you're
Mm.
talking about fund one, then fund two. You're doing the hard work and the hard yards, getting those first two out the way, and then you're supposed to, sort of use that to accelerate in fund three, four, five, and then keep going as you build a brand. And so I think it's a multi-year plan, and yes, there are a lot more funds, and that's great, because I think it's always great to have more rather than less in the ecosystem. It obviously has worked out really well for the Bay Area, not to have 3 funds alone, but,
Yeah.
have an ecosystem. And, it's circular, right? More funds means
Yep.
more money, means more companies, which means more founders and exits, which means more, recycle.
Yeah. Which is great.
Yeah.
And so I love to switch gears and talk about, like, what people don't talk about as a GP is the LPs, right? Because, like, they come to you and think, oh, you have all this money to invest. But then, part of your job is also talking to LPs and, like, making sure they're good. Like, how do you handle that side? Is it like one partner is better with LPs or all 3 of you? I mean, how does that work for Unlock?
I think, look, God didn't create everyone equal. Some people are better
Mm-hmm.
at raising than others, but we all of us are responsible for raising. And I think LPs, again, just like your funds, those are potential multi-fund, multi-year relationships. So there is not a, hey, I've got your money, your commitment, and therefore, great, we'll see you maybe at the annual meeting, maybe we'll get the quarterlies, we'll see each other, we'll talk twice, in 4 years or next time. It's not quite like that, right? Good relationships require care and they require attention. And so for us, we were constantly trying to add value to our LPs outside of just the investment. As you know, John, we have events, but we try to do educational things. Not everyone is challenged for time, but it's like, look, let's try to do topical things. And then we are very big on just long-term ecosystem building, which means you don't have to always talk about business. Have dinners,
Mm-hmm.
no agenda, people. And then we want to foster LPs meeting each other, because that's the other value add. The big value add is and obviously the last couple of years have sort of, put a little bit of a dampener on some of those things, but we see those things picking up and accelerating, and it's fantastic. We love building relationships with not just our LPs, but helping them build relationships with each other.
Sanjay, I'm curious, like, there's so much information out there. What do you do to keep up? Like, are there books or websites or publication or podcasts that you feel that you need to read every day? It's just like, if you're studying the financial markets, there's certain things. Oh, I got to go on Bloomberg. I got to go Wall Street Journal. I got to go to CNBC. You as a venture capitalist, where do you consume or get your data?
I mean, I think this is a big problem. I think there's just, and I should rephrase. That is the challenge, which is, it is not like I just specialize in fintech for, neobanks. It is, it is across the board, since we're industry agnostic. I look at, the usual, I'll look at the usual suspects in terms of TechCrunch and Mashable, and I do like getting the .la emails because for the local piece, but I think the information piece has got to be more. I wish I had more time to read, which is something that I'm going to spend more time on over the summer. It's just a question. At least I don't know how it is for you, but for me, during the fund cycle, when you're raising the fund, time is a lot more compressed, especially when it overlaps with, with your portfolio companies also raising. And I think, we're closing the fund next week, and so at that point in time, we can sort of concentrate more on just all the portfolio, but also extra time to read. But I think definitely I do pick some books to read that are more business centric, more around processes, things that I think can help our portfolio companies. I wish I could read more about historical pieces to think about, historical finance stuff as you think about it as a precursor to or an indicator of what might be going on right now. But the good news about being around for a while as a professional is some of those cycles you actually lived through as a professional, so you can draw on that as you think to advise your companies. I just had a conversation with one of our portfolio companies right now who's raising, and she was just asking me about my thoughts on the market, and I just gave some of the perspective. There's the near-term perspective, but then if you zoom out, what is the longer-term perspective? And, so if you have a good business and you're doing good things, money always finds you.
Yeah.
I think, but definitely, I think there's enough information there. In fact, there's too much information. I want to spend more
Hmm.
time on podcasts. It's just a question of having time on my drive where
Right.
I'm not on phone calls.
Hmm. Hmm. And speaking of which, like, I'm curious, for like a current event topic or whatever you want to call it, like, what are your thoughts on Web3 and NFTs? Like, that's a hot topic in
Hmm.
just in venture capital investing
Yeah.
and really like, going from Web2 to Web3. But like, I'm curious, like, I like to ask everyone their perspective because I actually think like, I think we're probably only maybe 2 to 3% of people know what an
Yes.
NFT actually is.
Yes. Well, first off, very positive on the space.
Hmm.
Oh, and
Hmm.
I'm not necessarily talking about the current iteration, though. I think people mistake something in its infancy relative to its
Hmm.
sophistication. I think I see a lot of things where people say, "Oh, this is like the first innings of the internet," and it might. I'm not discounting or disproving that. The difference is that people assume that the time to get to maturity will
Hmm.
follow that other pattern, and I don't believe so. I believe,
Right.
again, some global macro factors around the capital markets might change certain things, but I think that time to scale and maturity is going to be much more compressed than we saw in the last cycle. And that's
Right.
some of the issues that people are having is the rate of change of what it is so quick. It's hard to absorb. So you talk about us being 2 or 3%, but we itself, I mean, we're professional investors. It's not like we're sitting there coding, on Ethereum or any of those things, or layer one, layer two, all that stuff. But that rate of change is so quick that I think I do believe that the underlying value proposition is incredibly compelling. I think if you just look at everything out there, right? Let's just people conflate a lot of things, by the way. It's like Web3 gets tossed into metaverse, gets tossed in with NFTs, with blockchain and crypto. And yes, there's interrelationships, but those are different things. And so I think that fundamentally money gets made because there's enough margin or there's enough pot of money in the traditional space that one can try to attract using new technologies. So if you think about the internet and what it approached as it was trying to move monies from the traditional space to the digital space, I think that when I look at the opportunity for Web3 and for blockchain, the amount of money that it can potentially address in terms of traditional dollars and traditional commerce is massive. And
Right.
so anytime there's that much of sort of pot of gold at the end of the rainbow, you're going to see a lot of money flow to it, and you're going to see people ultimately figure it out. And when they do, we're going to look back just like we look at the Amazons of the world and the Facebooks or Metas of the world, the Googles of the world. You're going to look back at these companies and say, "Oh wow, you know, it is incredible the amount of value that they have generated, and therefore the amount of value that will flow to them." Did I answer your
Okay.
question?
Yeah, absolutely. Because it's each one's perspective, right? I mean, I agree with you. It really isn't just a collectible market. For me, it's like it's a utility and like how we use the data from that and
Hmm.
the brand and the customer.
Yeah,
Like what is the relationship
yeah. I mean,
with it?
people can make fun of anything. I mean, I understand right now, you know, BC is taking a bit of a beating, but I think everyone it's all relative. Look at the actual value it still has is a big number. But I always say, well, what's the value of why do stamps have value?
Hmm.
I mean, a stamp as a
Yeah.
collectible. I mean, if you actually use the stamp to mail a letter, it loses its value, right? It's got to be non-postmarked. So exactly what
Yeah.
is a store of
Hmm.
value? Why does a stamp with some ruler's face on it have any value
Hmm.
if because it's 50 years old?
Yeah.
It's a
Yeah.
store of value or whatever people derive value from. The cool thing with NFTs, like some of this stuff, as you well know, It's actually speaks to credibility, a badge in certain cases of hey, I was in the know way back when. I was a
Mm,
supporter of this. I mean, I can't wear not that I could afford one, but I couldn't wear a night watch on my head and I walk out there, right? I can put
mhm.
an ape on my PFP, and then
Yep.
people can look at the chain and know if I wanted to establish when I actually bought it. It speaks to all of those things.
Hmm. And just out of curiosity for the listeners out there, what is a type of industry that you like looking at more so than your other partners that you think like, oh, I have a better knowledge or experience or expertise?
It's an interesting thing. It's not something that I had that much experience in before, but just because of the deals that we have done in this space, sort of the in-home fitness, connected fitness space. I've done, we've done a few deals in that, and more towards the health, health and fitness kind of area. That is
Hmm.
something we have an investment in Fight Camp, which is the first one
Yep.
we did, and then we invested in Sensate, and then we've also invested in Catalyst. So they're sort of interrelated in a sense, but I think the base part of this is, especially for a small fund, usually you go, oh, hardware, anything hardware. No, we're not going to do that, physical inventory. But we had a great experience with Fight Camp. We love the unit economics of the space. Yes, it seems to be a little bit out of favor, but I think that speaks more to when someone requires aggressive growth statistics when you're already at scale, it becomes a bit challenging, as we saw with Peloton. But
Right.
the basic unit economic model is very sound. It's a question of how do you scale appropriately, but those businesses are actually really good. They're negative working capital businesses when done right, which is rare for us to see in tech, especially early on. So
Right.
that is a space where I feel we've done some, but I think I've spent some time in the metaverse. I'm not going to sit here and say, oh, I'm the expert on it, because as I say, it changes so quickly. But yes, we've spent some time on that. But I think that's one example. Uh,
Hmm.
I will tell you that my one of my other partners is much better enterprise SaaS, and the other one is much better when it comes to
Yeah.
insure tech, for instance.
Yeah. No, it's funny. You get pigeonholed. Like, I think people think I'm a consumer investor because I have so many consumer products, and it's true. And I've worked in, wholesale retail. I get that space, but like, hey, I invested in Coinbase.
Right.
I've looked at other
Yeah.
things.
I mean, from outside coming in, people always send us media deals. Given my
Mm,
background as an operator in the space, and Andy, with Buddy TV, we get a ton of
yeah.
those things. It's very easy for us to evaluate things. I mean, if you want to send me something on VOD or OTT and all that, I mean, it's like the back of my hand, or metadata, and all of those things are very easy for me or us
Mhm.
to evaluate relatively quickly. I will tell you that we have a relatively high bar. I always say sometimes the worst people to try to go talk to get investments are VCs who have had a lot of operating experience in the space.
Yeah.
Their natural
Yeah.
biases sometimes cloud the outcome.
Absolutely, because I ran my family's contract manufacturing business, and if anybody wants to send me like
Yeah.
a clothing company, I'm like, oh, I'll pick it apart. I got out for a reason. But then like, hey, but sometimes it's all about brand building. If they do it, they do it. It's amazing.
Yes,
There's no rhyme or reason. Yeah.
I agree.
Well, yeah. Well, thank you so much for being here, Sanjay. If someone wants to connect with you, where can they do that? Like, how can they reach out or send you a deck or whatever?
Yeah, I think the best way, and frankly, of course, you can, email is one, but I think the best way for at least to interact with Unlock is just to go to our website and fill out the contact us form. So it's unlockvp.com/contact-us. But you can go to the site, unlockvp.com, and you can access the contact us form. And the good news there is there are a bunch of metadata fields that you can fill in. It gets stored, it's
Yeah.
recorded, it goes to everyone at the same time, and it's much easier for us to track than sending an individual email to a partner or one of the members of the team.
No, makes perfect sense. Great. Well, once again, thank you so much, Sanjay, and we'll see everyone in the next queue.